Something really strange just happened in the world of commodities. And I'm not talking about gold, I'm not talking about oil. I'm talking about something that connects the phone in your hand to the next car you might buy. And it all centers on a quiet multi-million-dollar deal for a silver mine down in Mexico. We need to break this down because it is a signal that something big is changing.
It really is the question, isn't it? Why would a company that makes phones and televisions suddenly get into the mining business? It just doesn't make sense on the surface. Tech companies write code, they design chips. They don't typically buy the entire output of a hole in the ground. But one of the largest companies on Earth just did exactly that, and it's a warning shot for the entire global silver market.
Welcome to the Bullion Signal Podcast, where we look at the macro trends, the precious metals, and the events that are shaping our financial future, helping you protect and grow your wealth. Today, we're talking about Samsung, because in October of 2025, they didn't just buy some stock in a mining company. They didn't just place a big order for silver. No. They went straight to the source and they locked down every single ounce that a mine is going to produce. This wasn't a financial bet. It was a strategic seizure of a physical asset. If you find this analysis valuable, make sure you hit that subscribe button for the Bullion Signal Podcast so you don't miss these critical updates.
All right, so let's get into the nitty-gritty of what actually happened. What did this deal really look like? And why is it so different from how business is usually done?
The tool they used to do this is called an offtake agreement. Now, it sounds complicated, but the idea is actually very simple. Think about it like this. You know how you might pre-order the next big video game or phone? Well, this is the corporate version of that on a massive scale. You are paying a company millions right now for a product they haven't even made yet. In this case, you're buying all the silver before it's even been dug out of the earth.
And here are the specifics of this deal. Samsung's trading division made a deal with Silverstorm Mining. The mine is called La Parrilla. It's in Durango, Mexico. And for the next 2 years, 100%, not some, not most, but 100% of the silver concentrate from that mine belongs to Samsung. That's about 6 million ounces of silver that is now completely off the table. It is not available for investors. It's not available for other companies. It is gone. It will never, ever hit the open market. Which, of course, brings us right back to the central mystery. Why? Why would Samsung go to such extreme lengths to secure what, in the grand scheme of things, is a relatively small mine? Well, the answer isn't on their quarterly earnings report. It's hidden deep inside their R&D labs.
The entire motivation for this incredibly aggressive move comes down to one piece of technology, a technology that is set to completely revolutionize everything from our phones to our cars, and that is the all-solid-state battery. This has been the holy grail of energy storage for years, and it looks like Samsung is about to crack the code on mass production.
And just look at the difference here. This isn't a small improvement. It's a complete paradigm shift. Forget waiting 30 or 40 minutes to charge your car. We're talking about 9 minutes. A battery that lasts for 20 years instead of 8. An electric car that can go 600 miles on a charge, not 300. And maybe the biggest deal of all, no fire risk. Because they use a solid material instead of a flammable liquid, the danger is just gone. This is an absolute game changer.
So, what's the magic dust? What's the secret ingredient that makes this incredible leap possible? Well, after decades of research, Samsung's engineers figured it out. They created this incredibly thin, protective layer inside the battery. And what is that layer made of? A silver carbon composite. Let me be perfectly clear. Without silver, this entire technological revolution, it doesn't happen.
And this is the point in the story where we have to zoom out. Because this is no longer just about Samsung's cool new battery. This is about what happens when a revolutionary technology slams head-on into the hard physical limits of a global commodity market. Let's put some hard numbers to this. To make one of these new batteries for an electric car, you're going to need about 1 kilogram of silver. Now, I know what you're thinking. 1 kilogram? That doesn't sound like that much. But just wait until you see what happens when we start to scale that up.
Okay, just look at these numbers. This is a conservative scenario. Let's say these new batteries only manage to capture 20% of the EV market. That alone, just that one application, would require 16,000 tons of silver a year. To put that in perspective, the entire planet only mines about 26,000 tons. So you're talking about a single new product consuming over 60% of the world's entire annual supply.
But it gets worse. Let's look a few years down the road. A 50% market share is very, very possible. At that point, the demand just from these batteries would be 40,000 tons of silver. And do you see the problem? The world only produces 26,000 tons. The math just completely breaks down. Demand from this one industry would literally be more than every ounce of silver mined on Earth.
And I know the question you're asking, because it's the logical one. If demand is about to explode, why don't the mining companies just mine more silver? It seems simple, right? Well, the reality of the silver market is anything but simple. There is a deep, fundamental problem with the supply side of silver.
And here it is. This is the dirty little secret of the silver industry. Most silver doesn't come from actual silver mines. A massive 72% of all the silver produced is a byproduct. It's what you get when you're really mining for lead or zinc or copper. That means that the supply of silver isn't driven by the demand for silver, it's tied to the demand for completely different industrial metals. You can't just turn a dial and get more silver.
And let's say you did want to open a brand new, dedicated silver mine. Well, good luck. You have to find the silver first. That takes 3 to 5 years. Then you have to get it permitted. Another 2 to 3 years. Then you have to build the thing. Another 3 to 5 years. All in, you are looking at 10 to 15 years before you get your first ounce of silver. You cannot just flip a switch. The supply is incredibly inflexible.
So let me ask you this. What do you do if you're a smart company and you know you're going to need a critical resource for your amazing new product? And you've just done the math and realized there's not going to be enough for everyone. Well, you start a race to lock up that supply before your competitors even know the game has started.
And look, we've seen this movie before. The playbook has already been written. Just go back a few years and look at what Tesla did with lithium. While everyone else was just buying lithium on the open market, Tesla was going straight to the mines and signing these offtake deals, locking in their future supply. Then the lithium shortage hit, and while everyone else was scrambling and paying insane prices, Tesla was fine. Samsung is just running the exact same play, but this time, the resource is silver.
And you can bet they won't be the only ones for long. Right now, in boardrooms at Toyota, at Volkswagen, at Apple, at Panasonic, they are all looking at this same data, and they are coming to the exact same terrifying conclusion. We need more silver, and there isn't enough. The corporate stampede to secure physical silver is just getting started.
So when you put all these pieces together, it leads us to a pretty profound conclusion about the future of this metal. The very nature of how silver is bought and sold is fundamentally changing right before our eyes.
What this all means is that for the big industrial players, the public market for silver, the spot price you see on your screen, is becoming irrelevant. It's a sideshow. Why would a company like Samsung risk its entire battery division on the hope that there will be enough silver to buy on the open market next year? They won't. They'll do exactly what they just did. Go behind closed doors and buy it all before it's even out of the ground. The real market is moving into the shadows.
And you have to understand, this is all happening to a market that was already in deep trouble. For 5 years in a row, the world has been in what's called a structural deficit for silver. That's just a fancy way of saying we are consistently using more silver than we mined, year after year after year. We've been draining our stockpiles to make up the difference. So the house was already on fire, and Samsung just showed up with a tanker truck full of gasoline.
And that really brings us to the most important takeaway from all of this. In the world of physical commodities, things don't change slowly. They happen all at once. Samsung's move is the proof. The industrial panic for physical silver has already started. They see the shortage coming and they're making their moves now. The only question is who else is paying attention? Because by the time this is obvious to everyone, it will be far, far too late. The game will be over. Thank you for joining us on the Bullion Signal Podcast. Remember to like, share, and subscribe so you can stay ahead of these crucial market shifts. Disclaimer: the content of this podcast is for informational and educational purposes only. It should not be construed as personal financial or investment advice. Please conduct your own research and consult with a qualified professional before making any financial decisions. You are solely responsible for your own actions.